And the first video, which should pop up at the top right of the screen, if you haven't watched that video, then I would recommend you just to go over that and watch that. It's not a very long video, but what it does do informatively, it provides some understanding as to what I was looking at in that video in terms of the euro dollar, primarily the forecast for the euro dollar over a 3-monthly period. So it wasn't a prophecy, no, it was just a forecast based off what we do and how we were able to enter these markets and understand the direction of the market over a prolonged period of time. Okay, and that just enhances trade executions, whether that's buy side or sell side, and also profit taking. Okay, so I think one thing that is super important here is the weekend in which the forecast was put out was, like I said, around about the 7th and the 8th of April. And then just after that, going into Tuesday's trading here, and then Wednesday's trading, we had some macroeconomic announcements that really just destroyed the structure here of this market. So we had this type of kind of channel, and the market trades higher, trades back down, and then looks as if it's going to break out, but actually they had a different game plan altogether. And it just to pause as well, to be quite honest, this sell-off was super important for the future trades that we was looking to take. And when this happened, it was an indication, to myself that what I was looking at in terms of the future price action was beginning to show itself to me just in this move down, these moves down that we had over this 1, 2, 3, 4-day period. And the reason I say that is that in order for the market to go higher, significantly higher over a longer period of time, it makes sense, logical sense, for the market to go as low as it can in a short space of time. And that's what we had. We had a really big play in terms of pips. Let's have a look. Yeah, over 250 pips, which is significant. It's significant in terms of over a 3-day period, the market just drops and loses its value. 250 pips have been taken out of the game, basically. So what I'm going to do is just highlight my chart with the annotations just to bring some clarity. So obviously we had this sell-off, which was super dope. And then what I was looking to do after that sell-off was look for some type of support. And we had this level here, 1.06, 600 or 6,000, however you want to call it, that acted as a support level. And the way that I look at these markets is from a very Forex standpoint, okay, is the Forex markets, they range between key levels, major key levels, round numbers, where the interbank market is able to deal or operate or function, within those round numbers. Okay, so these types of numbers here. So this 1.06 number, this 1.07, 1.08, 1.09, and if you're a trader, if you know anything about Forex, whatever research you've done, that should have come up in your research. This idea of these key levels, these solid levels where the market is able to deal and provide prices to the intermarket. The interbank is able to provide prices to either their clients or other banks and so on and so forth, even the central bank. So there's a lot of knowledge out there that kind of is able to, if you don't know already, give you some understanding of what key levels are and what they represent within a chart, with a Forex chart, and within trading itself. So That being said, we had this support build up here at this key level, and then because the market's range, what they tend to do is they move from one key level to another key level, especially when they're moving directionally. So directionally is not just 1 day, 2 day, but a long-term directional movement, which is over a 10, 20, 30, 40, 50, 60-day period. So when this market sold off very quickly, I knew then that I was on the right side of the market. And the number one goal as a trader is to ensure that you're on the right side of the market and you're able to flow in and out of the market with the rhythm of the market. And that was something I put out there in my first video. That is the first part to this video. This is the second video. It's just looking, yeah, basically I put that out there. So we had all of this play, so I was able to enter some of these trades and take my profits at key level. So I was taking profit here at this orange horizontal line, which is 100 pips, I believe. Yep, 100 pips, perfect place to take profits. Once my profits have been taken, I pull back to see how the market reacts, how it responds, because generally speaking, it's going to struggle straight away to close up, to trade higher from that key level. It generally wants to come back down to a place of support or a retest, a test. And what I mean by that, again, it's very kind of Forexy type of language, but you know, it's industry language as well, so to speak. But for me, it's just the market is going to want to come back down to give the players, so to speak, the opportunity again to buy at these very discounted prices. And that's what we see. We get above the key level, we come back down, close below, close above, close below, close above, close below, and then this is the buying opportunity here that happens for the major banks, for the major players. They're able to again push the market directionally, get it over the key level. You get another day here where they get it over the key level, and then it starts to trade up to this midpoint level, reaching up into this key level here. So that was the first initiation of that process. So major sell-off here. Let's take this up. Major sell-off. I did not think it was going to be that thick, but I wasn't trading it anyway, so I was just sitting on the sideline waiting to see if there was going to be any support. So there was no support here. So from down to this level, no support. Down again to this midpoint, no support, and then all the way back down to this key level. That's what we had, and then the market starts to rise from here. Up we go. We get above, consolidate, come back down, and then we start to attack this key level again. And I was looking for this behavior. You don't know how it's going to play out. I never know how it's going to play out, but I've got the systematic approach, which it doesn't matter how it plays out. I know where I'm going, and that's the most important thing. I know what direction I'm trading in. So that happened. Let's take that off here. And then again, we didn't close above the key level, so we come back down for a few days, find some support here at this midpoint, and then we trade up, get above the key level, this one, 180, something I spoke about in my first video, and then we make a big run and try and get up to this next key level. And then we struggle to do that. So the market comes back down, retraces, stops here, comes back up, finds support at this key level, and then takes back off, basically. So all this has happened from the mid-April all the way up until May. And I put my forecast out around about here, the weekend that was leading into this move down. And I said, I'm looking for bullish prices throughout April, May, and June. So we've had April's gone, and we've had bullish prices. May has happened, we've had bullish prices, and now we're just going to be going into the month of June. There's only 20 days of trading in June, and I'm still looking for bullish prices. And for me, I'm looking for price to get above this key level, and then potentially get above this key level as well. And the reason I say that is because according to my data and my metrics, this market is not trading at a premium. It's still trading at a discount because we came down from here and we haven't yet traded above this level from this play. So we're still kind of in it, according to my metrics and to the knowledge that I have and the data that I have, I'm still waiting for this market to trade up into a premium. The moment it starts to trade up into a premium, then we're going to start to see some backlash and some resistance. And for me, that premium is above this key level here, touching this midpoint and maybe up into this, take that off, this 110. Okay, we'll see how June trades. I'm still bullish. I'm not bearish. I'm not expecting this market to break down and to start trading back down to these key levels here and here. No, I'm looking for bullish price action to remain for the month of June. And just want to go to here a second, take that off. Just want to go to the monthly candle. So that was April. And I said to myself, look, I need to see bullish price action in May. I need a bullish close in May. And that's exactly what we've got. And I'm saying the same thing again today. I'm looking for a bullish close in June to give us 2 bullish candles to complete the cycle. April, May, June. Let's just go back to the daily. And what that corresponds to on the flip side is a weaker dollar and a weaker USD CAD. And that's what I'm looking for on those pairs as well. It's just weakness on the dollar, weakness on the USD CAD for the month of June. And then once June is out the way, I'll be able to assess the next phase of the market, basically. In addition, I will be uploading a video soon on this channel just talking about this pair here, Aussie versus the Swiss franc. I'm not going to go into the details now, but I will be uploading a video probably in the next week or two, once I've got the time, just to share what I think about this and where I believe it's going to be moving to in terms of price, etc. But for now, I just wanted to come on here, upload this video, just to kind of back up what I said over a month ago. It's in stone, it's in writing, and here we are, you know, in a bullish market, just as I said all those weeks ago. Basically 5 weeks ago, I was talking about this. I put it out there. I said I was looking for buys. It's in the description. Everything is there. So this is just the final video, part 2, to show I said it. It's happened. Where do we go next? And hopefully down the line, you know, Anglo-Sax will be able to share some of our live trades and, you know, do a lot more wonderful things hopefully down the line. Just depends on lots of different variables, the direction of this business and where things go. But I think it's good to share. I think it's good to share, you know, ideas and thoughts and just this very low level approach. I think it's important just to put it out there on the internet, and so people, if they ever come across this channel, they can, you know, have confidence that, you know, somebody knows what they're talking about when it comes to trading these markets, and somebody understands these markets from a different angle and from a different perspective than, you know, just the normal type of man or woman who's out there who's selling courses and selling information and so on and so forth. The approach that we take is very, very different. It's not the norm, put it that way. And I don't think I've heard anybody come online not predicting, but forecasting 3 months worth of price action even before it's happened. And that's not to blow a trumpet, you know, for myself, but it's just to show that there is approaches that can be taken that yield, you know, abundant fruit. Basically, there's approaches that can be taken that can yield such luxurious fruit and abundance of fruit that's different to the normal kind of way that people approach these markets. And the reason I say that is because I'm going to be completely frank. These markets are rigged. It's like the casino. It's rigged. And once you understand that the market's rigged, then you need to have tools and systems and just expertise in in knowing how to decode what is really going off, you know, how to decode it and understand it for what it really is versus what it's not. So again, I probably said too much, but I'm not going to say anything else other than that. But I hope you enjoy just this second part. It's very brief, very raw, off the cuff today. But again, it's just following on from what I've said just over a month ago. Before all of this happened, so before any of this happened, you know, I was up here saying I'm expecting bullish prices, and then look what happens. Price drops, which is typical. It drops all the way down here, and then lo and behold, everything starts to work out. Everything starts to rise again, just as expected. I just didn't think it would be that aggressive, actually. But either way, it doesn't matter, because this forecast for the month of going towards the end of April into May is proven to be valid, because we've had higher prices. And think about it, this thing could have just stayed down and consolidated and traded down here for a whole month, but no, it hasn't. It's traded higher. Any comments, any questions, please feel free to reach out, and I'd be more than happy in due course, in due time, to get back or to answer any questions, any queries. That's it from me. That's it for Anglo-Sax. Thanks very much for your time.